The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday, Tuesday, Wednesday, Thursday, Friday, 11 o'clock until noon. Eastern Time, 877-927-6648 is the number to call. And great program, as you heard. Steve Rose, 2 hours, fabulous shows, I should say, 2 hours. And I'll be here for 2 hours. In fact, it just worked out. I've managed to change something, and I'm going to be able to do Larry's show straight after mine. So 2 hours coming up. 877-927-6648 is the number to call. Hey, let's just go through these things one at a time. Beginning of the week, let's start afresh. What are we looking at? We're looking at a number of things. We're looking at the E-mini right here. That's the daily. That's the 120-minute chart. 120 has a little bit more complex notations with all the Chapman wave methodologies. Don't want to go through it right now other than to say the left side low of 1680 was 0.50 was taken out. 1677 was the next level. Went down to 1675.25 this morning. And had a very strong single leg A up rally at this particular point. It's so interesting. The prices in certain of the indexes has held very well. The Dow is one of the weaker indexes, given a sell signal to a sell mode. S&P is in a sell mode in the daily. Weekly, I have not got a confirmation yet. Haven't even got a confirmation yet in the weekly, but my anticipation is that we will get a sell signal in the weekly. Just have to break a little bit lower. We'll go through those numbers. But look at this E-mini. The E-mini has held pretty darn well, considering there's been 6 sessions since the 1705 high in the E-mini September contract. Held very well. It's only down the low today at 1675. That's like 30 points. 25. Yeah. Wait, 25? No, 20 points. Why am I getting that right? 30 points, of course. 30 points. But 30 points is really nothing when you're getting some kind of a sell signal. So this is the way I'm looking at this. It is going to be a slow rollover. And the implication for those for the subscribers that I have in my opening call, they got the charts the last couple of weeks. But especially today, I showed the monthly chart of the S&P going back all the way to 1994. Actually, it goes back even before then, but the channel starts in 1994. And it's fascinating that at every time the Dow has gone into that second buy mode, in the first case it was a third buy mode, but in the last two, since the low of October 2002, that second buy mode gets to leg D and bumps up against the resistance line, and then has a pretty sharp sell-off. But it's only momentary, maybe a month, maybe 2 months, and then in 2000 it ran back up, but did not make a new high. 2007. Instead it pulled back, made the H pattern at the top, that inverted H, like the Y reverse double top pattern, call it the drop bucket, whoosh, came down. So this is going to be very interesting. Are we getting a conglomeration? Is this D going to go to an E, maybe even an F? Is it going to be a D top? I don't think it's going to be a D top. Still too much strength, but I'm looking at sectors that have been absolutely fantastic. The absolute creme de la creme of this bull market over the last many months, finally getting signals to say, be careful, be very careful. So, sell signal, sell mode, yes, and the technical is not quite right in the price. It hasn't decisively broken under the 9-period moving average. I want to see 1662, 1658 taken out, and then I think we're in a decided sell mode in the daily, and the weekly goes to sell signal. That's in the E-mini. Now, this rally has just bumped into resistance at 1688. And we're going to watch it closely. This could be a single leg A up. If there is a slide later on below 1683, 81, that whole area of very big support, that'll be it. And if there's a breakout to 1691, have to consider that it's something to take into to to be aware of as following in the footsteps. I'm going to jump, instead of going to the down the S&P, I'm going to jump right to the Qs, because the Qs have still got a missing leg D. Isn't that amazing? I don't know how that works. Look, 77.08. It tried to get there, just missed it by a few cents. Even now today, the high of 17.81 is only 29 cents away. Hey, that should be nothing to get there, to get to leg D. I'm looking at the weekly and the monthly charts as being very, very important, because the monthly actually is broken out of that rising triangle, that apex that says normally the price should fall, but if it breaks out, consider it to be a significant anticipator of support being raised. That's all it says. And the raised support is on a monthly basis at 72 to 71. On a weekly basis is 75. Not a big deal, 1.5 from here. So that's the QQQs. Now let's go to the Dow. Mixing it up a little bit today. The Dow made a peak F-top with decidedly negative technicals as it did that at 15,658 on the 2nd of August. It is in a sell mode in the daily. The weekly only just confirmed a peak D, so I can't do anything yet to say that it's in a sell signal, sell mode. All I can say is I'll do this here as well. I really like this particular way of looking at charts. Look at this. Now I'm changing it. Vertical line. Folks, if you're looking at Tiger TV, what you will see is just changing the color, make it very light here so that you can see the entire bar. There it is. Okay. Look at 15,542 in the Dow, the high of the week of 24th of May. MACD, stochastic, pretty good. Stochastic was a tad lower than it had been, but still very good. On balance volume, very good, but turning down. Well, the relative strength was already turning down. The 9-period exponential moving average, and I drew this before, I'll just draw it again. I don't like to put in the indicators once they're completed, they're done, but I'll put it in. That falling axe formation in the weekly set, if you break out, you can make a one-to-one extension to the top. Well, it goes from the low of 14,551 all the way to 15,658 in the week of the 2nd of August, and then pull back. At 15,658, it pulls back and is holding onto the 9-period moving average. It is not hugging it, it is gripping it like, of course I can't remember the name of those great tightrope walkers, Zalanda, what is their name? He just walked the Niagara Falls. What an unbelievable feat. They go all upset because he was told to use some kind of a brace, some kind of a harness, and something that would catch, that if he fell, he'd be able to, he'd be saved by dangling on the wire there. And he was very upset because he was never used it, never done it before. All of a sudden, they're asking him to do this whole thing with something that he had never done. He was quite prepared to go without it. Very Wallander, I think his name. Yeah, thank you, Terry in the den. Wallander. Oh, yeah, Robin and yeah, Terry. I just got it as I looked around. Wallander. I usually have to do the alphabet to get the names. Hadn't got there yet. So that's hugging the line on Niagara Falls. But look at the MACD turning down. Look at the stochastic at 91%, still strong, but showing a sign that it could turn down from here. I don't want to over-anticipate. So I'm just going to say we're watching closely because a close below, that is on the weekly basis, a close below 15,290, that's the number I'm going to use right now. That's a tad underneath the 90 EMA, but I want you to close decisively under it. And what it says, especially since that there is another signal here that says that one of the moving averages is moving above that 9 EMA, and that's going to be a negative. It says watch closely, because there's a good chance this is going to be peak D, where the technical's way weaker on this rally than it was before. It's like looking at volume, using light volume. I don't use volume that way. I use on-balance volume, and that is turned down. Let's be careful. Monthly chart, pumped. Well, first of all, look at this. You see, I wonder if I should make it darker just so that you can see. I'll point it out. I'd prefer not to make things overly complicated. Let me open up this weekly chart so you can see it. You see there's a dashed line here and a dashed line there. That's called the Chapman Wave Inside Track. And that says that within that line there is always a reversal. Oh, I'm sorry, there has always been a reversal. And once again, there's been a reversal. If it decisively breaks into 15,700s in the next week or two, that'll be very positive for the Dow. Meantime, I'm thinking it's going to be pulling back because this is big. This is very strong resistance. So we'll see. My thinking and the action might be two different things. We're dealing with it by being short the Dow for a couple of weeks now. And so far, that trade is looking okay. Now let's go to the S&P. SPX, I'll just do this quickly. Then we'll take calls at 877-927-6648. See, it's held a little bit better than the Dow. 1709.67 was the high of the 2nd of August. And look what happened. Little silent doji next to it. Then you come down, trough A, trough B. No, trough A, leg B. MACD and stochastic are very poor. And yet the price is holding. The weekly chart is the one that's going to be significant. It has not deflected lower. It has not acted like the Dow. So it's a tad stronger. We need to see the S&P close underneath 1666, this week, preferably this week, without taking out the old high of 1709.67. And that'll give me a sell signal in the weekly, not yet a sell mode, just a sell signal. Now we go to the Qs, 1, 2, 3. Look, the Qs are trying very hard to get to 7709. Complete that leg D, and if it drags all the markets up higher, it says that that monthly chart could give a peak D, but it might not be for more than several weeks rather than months, just a few weeks, and then we can start heading up. Or it's going to say, consolidation finished, 1%, 2%, and we don't care. We're done. We're going on. I just don't think that yet. Now, of course, I make a big deal about the volatility index. The VIX index has gone back to 1293. Peak A. As long as it hangs around here, this is buying pressure. I cannot deny it. I'm not going to fight it. It's just there. I've got stops on our short positions. One of them has done extremely well. It's a sector short. And I'm suspecting that sector short might have picked the top tick in a hat-trick top. I have no idea if it's going to. I just have a lot of conviction that at least in the shorter term, this particular sector is vulnerable, and so far it's been vulnerable. Now let's just go to gold. GCZ 13. Very nice, strong move up. This is actually called gray leg A up. Why do I call it gray leg A? Because it's underneath the 1349.20 previous high. It's a 1343.70 high thus far. A really strong couple of days from the 1271.80 low in the December contract. I'll talk a little bit about this, a little more about this, because it's really important later on when I do Larry Pesavento's show, because, you know, he does commodities. It's trade what you see, but he also loves to go to all these different commodities that he trades and to the futures. I'll do that in his show. So Dow's up 2, S&P's down 1.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Basil Chapman, Tiger Technicians Hour. Let's see. Dow is up. The Dow is up 15,430. The S&P is just about unch at 1690. The comp index is up 10 at 36.70. Gold is up 27 at 13.39. Silver's up 0.90 at 21.31. What have we got here? We've got, let me just check this out. I wanted to see. High-grade copper's done very nice. Platinum's up 8 at 15.07. And you've got high-grade copper 0.15 at 3.3. Crude oil is down a tad, and bonds are up 7.30 seconds. The dollar is also up. It's up 21.30 seconds. So let me go through a couple of things. Before I forget, I had an email on Friday from one of my subscribers wanting to know about CFN, Care Fusion Core, Global Medical Technical for the healthcare industry. They do the software stuff. So I had, in fact, sent a chart back to her, and it came back. So I don't know if she got it or not. If you don't mind just sending me an email to say you got it or you didn't get it, but I'm going to show it right now. I'm going to go to the callers in a moment. I just want to show CFN is Care Fusion Core. It's in leg E up in the monthly chart, made a high of 39.38. Pulled back quite sharply the other day. I don't know if it's earnings news or what. That was peak E in the weekly, right in that up channel inside track that I always talk about. But it went to the support inside track of 3506. So the question was, isn't this making a dreaded H formation? As far as I can see, it is making it. In fact, they confirmed it, except now there's inside strength. So it pulled back just like I expected, like you expected. It went to 3660. The low was 35.06 on that crazy day of August the 2nd. But I still think that the 9-period moving average at 37.36 is going to be strong resistance, and that wick is going to be filled in slowly but surely because the technicals are actually quite poor. I'm wrong if this makes a new recovery high above 37.58. So about 60, 70 cents higher. At this particular point, I believe that there should be further weakness to come, and I think that you are in the right position. So I just wanted to cover that, and if you could just send me an email to say you either got mine or not. I don't know what happened. I sent it right back to the same email address. So let's go to our first caller. We got John in San Jose. San Jose, California. Hi, John. How are you? John, you there? John was there. And I'm going to, John, you there?
Yes, I'm here. How are you?
I'm good. How are you?
I'm doing pretty good, thanks. I have a quick question about GDX, the gold miners.
Okay.
Is it a good idea to keep it, or in the short term it's better to sell it and buy back later?
Okay, now, so you bought it the other day, and you got a position, you're in a winning position. Is that correct?
Yes.
Okay, I'm going to make a recommendation. Stay with the trade. It's lagging a lot. It's a lousy monthly chart, but this is the first time the weekly chart today, as of right now, and it's still, the week is not even 2 hours old, so it's just, this is the first time I can say that the weekly chart is starting to show the kind of improvement that says that if there is any pullback, it should be contained. GDX is trading right now at 27.93, up 146. Fabulous move, 5.52%. However, it really needs, even if it doesn't close, it needs to break above 28.35. So here's my strategy would be this. Even though I've got a peak D in the daily, and it's pulled back very sharply, actually a lot sharper than it should have. 28.35 was the high on 23rd of July. It pulled back to 23.89 on the 7th, and in just 3 days, it's gone right back, and it's almost about to test the previous high. I like that action, the fact that you sat through it. Did you buy it on this dip, or had you bought it earlier?
No, I bought it in the dip.
Okay, so then if that's the case, I'm going to suggest two things. One is I would like you to try to keep this as a core position because gold got so smashed to the downside. This is, first of all, this is the very big double-digit moves that we've seen the past couple of days in gold. That was what, if that didn't happen, I would be negative on gold. I'd consider this just a bounce that was going to retrace and go back to the previous low for a test. The fact that you're getting this kind of move with no story whatsoever, the dollar is up, the stock market theoretically is held pretty well. It's not like there's a bank crisis that people need to flood to what I always call the safety of, this is gold as a currency of safety. I like the fact that the GDX is starting to move. I think the GLD is actually a better one, but GDX is fine. Now, so hold on, because I'd like to just cover a couple of little things in the gold market, and as I'm covering it, I'll show you a little bit of the differences between the gold contract, and the GDX, and some of the gold indexes. I'll be back.
With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone. We are back, and we are back with John and San Jose. We're looking at the GDX. So this is what I'm looking at. If you look at the HUI, that has, of course, pretty much the same pattern as the GDX, and there's a pattern that I call it's the breakout pattern. I call it the falling axe. It looks like an expanding cone, declining cone. And as it breaks out, it's very positive because you just keep looking to the left side peaks to say if it breaks this one, to go to the next one, to go to the next one. And that says that the HUI has a chance if it breaks above 255 at 253.96 is the high today, then it should go above 263.04 for leg D in the daily chart. So that makes the GDX same pattern. It is already broken above the left side highs. Says there's just a really good chance it's going to go for 28.36, which will start leg. I'm calling it leg E for now, but the weekly chart, that's what I keep saying. The weekly chart, that'll make it leg B, and that's very positive. I would like you to keep a core position. I would only suggest, I got a little too cute for my subscribers. We had one particular stock. We bought it at $1.20. It had a fabulous gain, a pullback. I said, let's just make, if it goes underneath at 120 level, it could actually slide a little bit more. We can always buy it back. Let's make the stop 121. So we made 1 penny, and now it's trading at when I last looked, it was 149. Didn't get a chance to get back in. Thank goodness we do have, we are on long gold, and that's doing very well. So I don't want you to get too clever. I got too clever, and it didn't cost us a profit because we made one, but it cost us a really good position that I wanted to be in and stay in, because at $1.20, at this point now, I don't think it's going back to $1.20 for a long time. So it would have been a great entry. I don't mind getting back in on a pullback, even if it's higher, because I think this particular stock will go higher. But I've lost that, like you would lose your nice entry point if you got too cute. Stay in the position. I like what's happening. The XAU is a little stronger, actually. It is, in fact, it is now at 103.75 was peak C. It's at 102.95. It's got 90 cents, about 80 cents to go. And it starts leg D, and that'll be leg B in the weekly chart. I like your position. The GDX is a little bit of a lagger in the sense that it got hit so badly and it's taking its time to get back. I think it's going to be catching up with gold at this particular point. Stay in the position. The only thing I will say to you, if you've treated this as a trade, if it pulls back, it's at 28.02. If it pulls back to 26.19, 26.18, if you want to take a little bit off, you can take a little bit off. I like your entry. I think it's good. I'd like you to stay with it. Just call me up in another couple of days and we'll look at it again. Congratulations for a great entry. The big thing will be, do you want to add to it? And that's what we can look at maybe in a few days' time. Thank you so much for calling, John.
Thank you. Thanks for your guidance. Appreciate it.
And I hope it helped you. Thank you. Let's go to John in Philly. Hi, John. How are you?
Good. Good morning to you, Basil. Thanks for taking the call. And
my pleasure.
A GDX analysis with your prior caller is a great segue to the question I had for you on gold and silver. Basil, what I wanted to ask, I wanted to point out an observation I've made on the weekly chart for gold and silver, and then ask you a detailed question about use of the Chapman wave. What I've observed, Basil, is since gold and silver both peaked out in October 2012,
right,
and then turned down, the weekly bars have remained under the 9-week EMA for like a period of like 30 or 40 bars. I mean, just
for
a
the
long
longest
time.
that they've done that in a very long time. Yes.
So we've had this phenomena that you point to often when you're just looking at trends of markets. You say, hey, the market price is walking the 9 EMA, which was the case to the downside, gold and silver. Now,
so that was the resistance, right?
With that observation in mind, now that right here, right now, with the rally in gold and silver, of course we don't have a weekly close yet, but if gold and silver prices were to close right where they are at this moment, the weekly charts in both would be over their respective 9 EMAs.
Correct.
My question, Basil, is having been under and walking down the 9 EMA for so long, now that they are in the cusp of turning above for the first time in 40 bars, what is your experience? Is this significant? Do you have some rule of thumb for expecting what's likely to occur now going forward with this sort of setup with the 9 EMA?
I have a number of observations right now. The first is, this is leg C. Folks, what we're looking at, I'm looking at the continuous contract of in silver. Just let me quickly go to this. The silver, December silver, and if they're using the Qs or they're using the Zs, doesn't matter. I'm going to go to the continuous because 2138, it's so close, 2138, and I'm looking at the continuous, which is at 21.33. So in the continuous contract, I've notated a number of different things. And as John pointed out, there have been times where the price was underneath that black line, which is, if you're looking at the charts, this is the weekly chart, then it was over the black line. And for the longest period, 40 bars or more, it went underneath the 9-period moving average, and only last week did it bump up and then close on the line That was the first time since it broke underneath back in the week of 8th of February. So I have a rule of thumb, and it says there are, let's look at it as if there are three parameters. And I meant to do this. I'm going to do this right now. Give me 1 second. I'm just going to say copy, paste. And in this one, all I'm going to do is I'm going to get rid of, wow, I hope I remember what I'm doing here. I'm going to get rid of, what am I going to get rid of? I'm going to get rid of the technicals. So cancel. I also like to look at what I call naked charts. The naked charts are charts that where I've taken everything away, remove MACD, remove, I suppose I could have done it easier, but I'll do it this way. Just taking one moment here. I'm removing everything in the technical format. I'm removing volume. I'm removing everything. Oh, I should have kept volume. I have a special technique in volume, but I won't use it now. At this particular point, I have, just because it's convenient, I've kept a couple of moving averages, but they're not the ones underneath. So that means that I'm looking at basically what I would call a naked chart. Actually, I'm going to make it a naked chart. I'm getting rid of that. Remove. I'm removing everything that I can. I want you just to look at the chart, and without being influenced one iota by anything that's on the chart other than the Chapman wave notation, going to the second cell mode, let's just have a look at things together, and I'll explain what I'm looking at. When I look at this chart, and I'm looking at, I'm saying, how many bars are red and how many bars are green? Is there a predominance of red or is there a predominance of green? Up until this very moment, I have to say there's been a predominance of red. So that says it's a bearish chart just in terms of the number of red bars, number of green bars. Green closing up and red closing down. Number one. Number two is, where is the most recent doji candle of significance? Well, it was this one right here, which became almost a halfway marker, and that was back on the week of the 3rd of May. So that tells me there's a fulcrum to the downside, which was not quite met because it didn't extend far enough. That to me is a positive. That's number one. Then I glance to the left side and I say, hey, wait a minute. In this candle, the big ugly red, an entire week, it opens at 2207. That is almost the high, and closes at the low. If ever there was a bearish candle, that is it. Well, that candle of the 21st of June obviously becomes really important if I use a very simple technique and say, wait a minute, we're in leg A, we're in leg C after making peak A and peak B. This is the most pathetic rally. Even the rally back in the week of the 29th of June of last year went from 2642 all the way to a peak D at 3566. But leg C was huge. So this is wait a minute, that's not even a peak A, that's not even a peak B. That's really just a C1, C2. So wait, let me just get this right. That is B. Wow, that failed. They didn't even make a D. It went to a C minus. So, but look at the strength in the move to the upside. So the move to this particular point, granted it's just the first 2 hours of trading in the first, in the 1, 2, 3, 4, 5, 6, in the 7th week after the low was made back in the week of the 28th of June of this year at 18.17. But you can see this is it feels like it's a fantastic rally, especially if you bought the low, and I know that you've been buying from the low, but it is the week isn't finished, thank goodness, but for it to be a really powerful buy signal to buy mode, at this point it's only a buy signal in the weekly. I don't really have a confirmation at all of a buy mode. If it closed above the candle of the 21st of June, above 22.081, that will be a really good sign. Why will it be a good sign? Because then the candle that was the inflection point to keep going down of the 3rd of May at 24.60 and a low of 23.23, that becomes the upside target. So now let's get rid of this and come back to the gold chart and see how does that, I'm sorry, to the silver chart. How is it represented with the technicals? Well, number one, let me just have this. There we are. Number one, the stochastic's gone from about 8%, what was it, 11%? Yeah, about 10% to 29%. So that's gone from from a buy signal in the stochastic to a buy mode because it's above the 20% level. The MACD is just now confirmed with a pretty nice, well, the week's just starting, but so far it's a pretty nice beta between the fast-moving average crossing the slow-moving average, but it's still way down. But there is two good signs with the histogram over the last 2 weeks so far being positive above the 0% line. Now, here's the kicker. For the first time, we're beginning a week with the trading above the 9-period moving average. That, to me, is a very good technical sign. But when you get a perspective, I could draw a couple of things right now, and that will show you, if I do this right here, and I do this right here, you'll see that there is an expanding wedge formation. But it is really much, much higher. It goes all the way to the 200-period exponential moving average at 2680. And we're at 21,325. At this particular point, I have no choice but to go step by step. And all I can say, great opening to the week, especially since there is no reason why gold and silver should be going up now on a fundamental basis that we know of, that at least I know of. So it's being done on a technical basis because price is so overbought, like a cork in water. You move your finger away and it pops up to the surface. That's what's happening here. But on a weekly basis, you can see that this is just the first attempt to at least turn around. I like everything I see, and that's the reason why we're in the gold, along the gold ETF. But at the same time, there's a lot more that has to be done. If you look at the weekly chart with the Eiffel Tower move straight up and then straight down, just about to touch the 200-period moving average of 17.32. It held a point above. This is so far nice, especially with the doji candle of last month, because you want to close above that candle for it to be positive. And that says 24.17 will be the monthly target if you finally closed above that candle of 2208. I would have to say above. Really the most important candle after that would be 2331, the candle of the 24th of May. How would this fail? And you always have to consider that there's another side to the story. It would fail if for any reason it started to move underneath the 9-period moving average and went to about 20.14, especially if it got into the wick of the 9th of August between 1985 and 1910. That would be very negative. So far, that's not there. So you're going to go step by step. Like the daily is in leg D. It broke above an up channel resistance point, and it's pointing very quickly to tackle the candle of the 19th of June of 2187. And the support here would be the candle high of 2130. So 2130, we're close by. I would say that this candle has tremendous support in silver between 20.90 and 20.50. I hope that covers a bunch of stuff.
Basil, thanks so much for your thoughts. I do appreciate it.
Thank you. You didn't have much to say. I know. I did it all. Thanks for calling, John.
Thank you.
So, folks, we'll also look at that, and we're going to look at the dollar. Well, I'll do a lot more of that in Larry's show, but in the meantime, dollar's bouncing. We'll be back straight after this.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. My pleasure to be on Monday through Friday, but I'm doing something today special. I'm going to stay another hour. I'm going to do Larry's show. Tough to do, but I'm going to do my very best. And, of course, I do follow the Gartleys and the butterflies. I spoke on Friday about that fabulous Gartley that was, I can't remember if it was a Gartley or a butterfly, that was presented by the Art of the Charts in USX. U.S. Steel, X is the symbol. What a fantastic move it's made. Congratulations to Dave White, to Tom O'Brien for just a great program. Hey, not everything works, but boy, when it works, it is fantastic. Look at that. U.S. Steel went from a close on the 7th of August at 17.19, is trading now over 2 points higher at 19.44, and I had it on the list, did not get it. I just, what can I say? We did have it at 18.67 for a 20-cent loss on the 30th, but I didn't hold it. I guess, that's the way it is. I don't know. What's actually most important to me at this particular point, and I mentioned this to my subscribers in my opening call, it's my daily service, very comprehensive service. We try to time things, try to time sectors, try to time stocks, but also we use just Chapman Wave just for basic entry points and exit points. And as I say, sometimes I get a little too clever, and I try to I put my stop a little too tight and a great entry onto one of the gold stocks. And wow, now it's teasing me. Now it's up at 150. We got it at 120. What can I say? So when I'm looking at the market, I'm saying to myself, there is still a couple of outstanding sectors with strength. One is that the Qs have not made the peak D, and I love to have everything all aligned, so I see no reason why we just hang around here for another day or so as the Qs attempt to make 77.09 or higher. At that point, we will look and see, is that going to join the other indices and make some kind of a top? I don't know. We'll see. It's my thinking. Trying to finesse it, maybe a little too clever, but that's the way I'm looking at the IWM. Look, the IWM is already a nice candle today, but it made a peak F top with far weaker technicals at the 105.63 peak F top 6 days ago than it is right now. Peak E in the weekly chart. So there are many signs to say, be careful here. Different sectors are starting to pull back. I'm looking at a sector in the defense area. There are a number of stocks, as I showed you the other day when I went through all these different stocks. Remember, BIIB, Biogen, IDAC, I said made a head and shoulders top at 234.73 with a doji candle. I love these dojis when you use them correctly, all the silent dojis that I teach in my Master Trader series. And a peak F probably in the monthly chart. When I looked at Celgene, that hadn't quite finished its move yet, but it made the peak F with a silent doji at 149.92. When I looked at Amgen, AMGN, you remember Amgen was trading at, it had that sudden spike to the upside. And I said, okay, we're going to watch that. Is that peak E? 113.30 was the high. I didn't see any round numbers yet, but it looks to me like that was an isolated spike, but that makes a rectangle formation. So that says, yeah, it could hold a bit better than the others. When we looked at REGN, that had given a peak D top with two round numbers the day before, 275 and 264. Hey, you got to learn these things. The doji candle at 282.27 peak D. Look at the pullback. Look at that peak C1, C2, the technique that I've been teaching for a long time now. When you just don't quite make that peak D, there's a technique that you can use, Regeneron Pharmaceuticals. So I'm going to continue in the next hour. We're going to be looking at the currencies. We're going to be looking at some other areas. We'll look at platinum and different things. Look at corn, whatever I can. So we'll go through a couple of commodities, and I will follow up. I can't say as if it was Larry's show, but I will be trying my best to do as much as I can on Larry's show. So I'll be here for the next hour. Stay tuned. Love to hear from you. 877-927-6648. Get ready. I'd love to take
patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter,
Patterns, Profits, and Peace of Mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.